back to Hard Money Academy. This is Chris Jameson with SF Lending, your hard money lender for life. This is Hard Money 107. How do you qualify for a hard money loan? There's really a couple things to keep in mind when you're going to apply for a hard money loan. One, you really need to define your exit strategy up front. If you're buying houses to hold as a rental property or a rental portfolio, you want to make sure that you can get out of the hard money loan before you even get in it. So if you're qualifying with a conventional loan and you're getting a Fannie Freddie 30-year fixed traditional mortgage, you want to make sure that you qualify for that loan product. If you've got access to regional banks or smaller banks and you're going to get a portfolio commercial loan to take out properties one at a time or 2, 3, 4 at a time, you want to make sure you qualify for that before you start buying 2, 3, 4 houses at a time. If you've got national refi products on your mind and you're looking to do the same thing, but maybe you don't qualify with a smaller bank and you've got to use these national programs that are backed by hedge funds, you're going to have a higher rate. A good thing though, now a lot of these are amortized over 25 to 30 years, so your cash flow can still actually be a decent amount, especially if you're paying a higher rate. If you're buying to flip and that's your strategy up front and you don't even want to go the buy and hold route, then it's a lot less difficult to qualify for a hard money loan. All we're really looking at is, do you have the cash in the bank to get into a deal, get through a deal, and get out of a deal, worst case scenario. So you've got the money in the bank for your oops, your out-of-pocket spending. You've got money in the bank for the holding costs. That's your interest payments, your taxes, your insurance, your maintenance, and things like that. And also to get out of a deal. Worst case scenario, you didn't account for having to replace a roof, but it was dinged on the final inspection before you sold the house. We want to make sure you have the reserves to be able to pay for that roof and not get stuck in a hard money loan because you can't do the one final thing that you need to be able to sell the house. Lastly, transactional funding. I mentioned that wholesalers can use hard money to close on a property on a double close, the front side, to be able to control the front side process or to not disclose how much money they're making. A hard money lender is going to pull credit in most situations because what they want to be on the lookout for is to make sure you don't have any state or federal liens against you or judgments that can, particularly from the IRS, that can cause an issue with getting money back on the back end closing. Now we're going to talk through the loan application. A hard money lender's loan application is pretty simple. It's typically 1, 2, 3 pages long, or some lenders also use what's called a 1003 loan application. That's the application that most conventional lenders use for their loan programs. The loan application is going to contain a few different sections. Your personal information, that's your name, contact information, date of birth, social, so they can run credit. Financial information, that's your assets, income, and employment information. Property information, this is where if you've got a property in mind or you're even under contract, you're going to disclose that information to the lender. That's address, maybe the size of the rehab, what you think the ARV is going to be, so you can determine if you're going to be on the same page with expectations and if the deal is going to be profitable or not. Real estate investing experience, that's a huge thing in today's market. There's a lot of new people starting to try to get into the business. If you have experience and you've done deals before, I hate to say it, but you're going to jump up to a higher priority than someone that has no experience. Declarations, that's just, have you filed bankruptcy, judgments, foreclosures, things like that. And then lastly, the authorization acknowledgement, that's where you just sign off that this information is valid, you're not lying, anything like that, or committing fraud. Credit report. Most lenders do pull credit, right? They're looking for a few things. They want to make sure it's recent, so they know if you're applying with a bunch of different lenders, or if you're trying to overextend yourself with debt. Maybe you just got a car, you just got a mortgage, you're applying with a different lender, this is your 5th house and you only have $40,000, which is enough to get through a deal. They're going to look at your median score. That's ultimate determination of your credit worthiness, right? What's the risk profile of this individual from a credit perspective? They're going to look for collection accounts, foreclosures, missed payments, payment history, loan balances, limits to balances to limits, things like that. Again, if you're buying for rental property, it's a little bit more in depth. You want to make sure, or the hard money lender wants to make sure that you can qualify to get out of their loan. And if you're buying for flips, a lot less lenient on this. They're still going to look for some things, especially the liens, foreclosures, judgments, collections, things like that. The credit report ultimately is the best determination of an individual's credit worthiness and risk profile from a lender's perspective. Supporting documents. This is going to be your bank statements, your entity information, your LLC docs, your EIN, everything like that, your investment accounts, where you're going to document the information that you put on your application. So you're going to say you have this. Now all you're doing is verifying that you actually have it. You know, we're going to trust your word as a lender, but we're also going to verify the information, of course. So here's what to expect in today's market. Today's market is very competitive. So you want to be able to get pre-qualified and approved right away, because if you're going to write offers on the MLS, realtors want to know that you have the ability to actually perform on the contracts that they're submitting on your behalf. Wholesalers want to know that you actually have the ability to close on the deals that they're wholesaling, and you're not 70% of the tire kickers that they're getting on Facebook. You want to make stronger offers, and to be able to do so, you need to know your capacity, your ability to buy a deal, pay for the out-of-pocket spending, pay for the holding costs, and get out of a deal worst case scenario, or meet your reserve requirements if you're buying rental properties and doing conventional refinances. You also want to build trust, right? So you want to build trust with your wholesalers, with your realtors, with your vendors, your other partners, part of your team. As you're building this all together, your general contractors, everything like that, you want to make sure that everyone's not wasting their time. You don't want to send a contractor out to a property and have a realtor run comps for you and not have the ability to even do the deal. They want to make sure that you're real, and the more times that you do not perform, the more that you're hurting your credibility every single time. So build trust, do what you say you're going to do, and perform. But to do that, you need to know your capacity up front, and you need to be able to pull the trigger quick, which means you need to be qualified before you even start looking. But most of all, in today's market, you got to have one thing that is more important than everything else, and that's hustle. You got to want it. If you are not willing to go look at a deal that a wholesaler blasts or a realtor puts on the MLS and has a showing over the weekend, or selling in an hour, then you're not going to do very well in this market. There's a lot of people out there that will drop what they're doing on a dime, go look at a property, lock it up, and put a contract on it in less than 30 minutes. That happened to me just a little bit ago. We responded 20 minutes late, within 30 minutes, but 20 minutes late. So a person had already replied, contacted the wholesaler, and was on the way out to the property within 10 minutes of an email blast to lock it up. And we were willing to buy the house sight unseen. I wouldn't recommend that. Definitely not for beginners. We're experienced, we're buying dozens of houses a year, so we know what we're doing. But that's the kind of competitive market that we're in. If you're not willing to hustle or work on the weekends, or at least leverage other people's knowledge, resources, skills, and abilities, then you're not going to succeed in this market. You got to have the hustle. So among everything else, you got to have the hustle and the desire and the ability to go out there, find deals, network, build relationships, talk with wholesalers, get with realtors that are investor friendly, network with lenders, get out to groups, and do everything that you can to make sure that you can buy properties in this market. And the more you work, the harder and the smarter that you work, and the more efficient you are, the better deals that you're going to find, as opposed to just sitting there waiting for deals that are kicked to you at 80, 85 cents, 90 cents on the dollar. If you go out and hustle, you can still get deals below 70%. I know that for a fact. So the key takeaways from this course, and this concludes the 100 level courses, is use hard money to minimize your out-of-pocket, to leverage other people's time, money, and resources, to be more qualified up front, and that's ready and able to pull the trigger on deals up front, and make sure that you define your exit strategy before you get into a deal. Talk with your lender and get on the same page with your expectations of what they think is realistic and what you think is possible. That concludes the Hard Money 100 level courses. I look forward to sharing more with you in the 200 level, 300, and 400 level, where we're going to go into some best practices and advanced strategies for using hard money in today's market. Signing off, this is Chris Jameson, SF Lending, your hard money lender for life. If you have any questions whatsoever, please feel free to reach out, send me an email. My information's on the screen. Call the toll-free number, Dallas, San Antonio, or even just reply in the bottom of this video. I look forward to working with you, your hard money lender for life.